Okay, hi. So here I am again, Russell Quirk, one of the co-founders at PropergandaPR, doing what's hopefully going to become a fairly regular thing for us, which is talking to the great and the good, the leaders of our industry insofar as how they're coping with coronavirus and actually some of the positives. Joining me today for this particular segment is Steve Moss, who is the managing director and founder of Sourced Capital. Steve, hi.
Hi, Russell. Thank you for having me.
That's all right, mate. Good to see you. Tell us all about Source Capital. Can you just give us a quick kind of intro in terms of what it does?
Yeah, absolutely. Yeah. So, as you mentioned, I'm the managing director of Source Capital. So, we are a peer-to-peer property platform. So, we work with investors that are looking for generally a fixed return over a fixed period. We find property projects, whether they're conversions, new builds, or refurbs. Put them onto our platform, and then we raise the money through the investors and give them a great return as well. So that's us in a nutshell.
Well, yeah, good nutshell. So you're kind of tech enabled, and you're kind of working both sides. So you're finding the projects, and you're also finding the investors to invest in those projects with a view to giving a return to investors, typically of what?
Yeah, our average return is 12%. So fixed, and our average sort of loan term is 12 months. So it's a good return. It's particularly in the market we're in, savings obviously reduced, etc. So it's a great way of having the security of an asset and also getting a really good return as well. So it's a very popular structure.
Yeah, brilliant return compared to cash at the moment. Obviously, the downside of interest rates being 0.1% is savers are getting less than inflation. They're actually losing money. So 12% some return.
Yeah, it's a great return. It's funny because I was speaking to an investor yesterday, and we were talking about the whole kind of structure and peer-to-peer and what the benefits of it are. And one of the things that I love about it is the fact that, for me to get something to work and there's so many moving parts, everybody's got to benefit. And with peer-to-peer in this structure, everybody benefits. The investors get a great return, and the platform benefits, and then the borrowers, the developers themselves, get to do their build and obviously get to make a profit from the back of that as well. So everybody in the circle is kind of enjoying it.
And typically, what sort of size is the business, if you don't mind me asking? So in terms of how many projects or the value of the projects that you'd have running at any one time?
Yeah, so we're doing raising around about £1 million a month at the moment. So the capital side of our business, the Source Group has 5 areas. So we do developments. We've got about £250 million worth of developments. We've also got a network of over 70 people across the UK, and they feed the properties into the platform. So the capital side is fairly, it's almost the newest part of the business, really. It's just over a year old. But yeah, we're up to about £1 million a month at the moment. So it's really good traction.
Yeah, look, big business. Fantastic. So look, let's talk about coronavirus. It's affected everybody, of course, in various different ways. How's it affected you and Source Capital?
Yeah, I think the key things are, we're part of the property world. So, straight away the market started to close down. And as you said before, we're working from 2 sides. We're working from finding the properties. So that's got challenges, getting surveyors out and viewing properties, etc. And then from the other side, investors' confidence investing into projects when they're a little bit unsure of what's going to happen or how long this potentially can go on for. So, business within the property sector pretty much slowed down almost immediately. And I'm sure you've seen that with other clients as well.
Yeah, but still a bit going on. I mean, and in terms of inquiries, and have you seen any difference in the last kind of week or so as we now kind of get halfway through week 4? Any kind of change in inquiry level or sentiment over the last few days?
It's really strange because I don't know whether it's regional and it's different in different areas, or I don't know whether it's people's attitude, because we've got 70 franchisees. So we've got this great network, and we've got some people that are kind of positioning themselves that nothing's working. I can't get out to see properties, or I can't do this, can't do that. And we've got some that are saying, well, I've had to ring 20 different surveyors' offices, and I've had to put these certain procedures in place so that they can go and see a property and not meet anybody, etc., etc. But they're still getting a surveyor out to the property. So they are still making steps forward, which is, I suppose it's down to their attitude and willing to get the deal across the line, really.
Yeah, and I think you've hit the nail on the head. Mindset at the moment, I think, is very important. And look, you can either play the victim and sit there watching Netflix for the next few weeks and, crying your beer, or you can think positively and, either try and find the bits of business, the scraps that are there, or pivot a little bit, or indeed prepare ready for recovery. Because one thing's for sure, there's going to be recovery, right? Certainly some markets are seeing that. And we were saying just before we started recording, of course, that history, of course, tells us that there's going to be a recovery too, right?
Yeah, absolutely. Yeah, I think you mentioned yourself earlier. This is more of a sort of freeze than a long-term recession, or certainly that's how it feels and looks. And even with investors, when this first started happening, we would speak to our larger investors that put into our platform, and their response straight away was, it's not got the feel of 2008, because we are getting supported. We know what's happening with the banks. We know, there was kind of no light at the end of the tunnel then. Whereas with this, we can see that, yeah, it's an illness, it's a flu, it's something that, but hopefully we are going to get over it, whether it's 3 months or 6 months, there is light at the end of that tunnel. So it's just being prepared and getting yourself set up so that as soon as we have, a sort of mellow down lockdown or reduced lockdown, then we can all start taking advantage of what potentially is going to be a great market.
Yeah, and look, of course, the market started very strongly at the beginning of this year. Post Brexit, although everyone accepts we haven't left yet, and it's now going to be delayed. But January, February, March, lots more activity, lots of inquiries. All the signs were that as a consequence of that, prices were going to firm up and so on. So look, that's positive. And this is a vodcast that is purposely designed to be quite positive. As I said to you earlier, I'm getting more and more irritated by the doom mongers, and whether that's on social media or whether it's the mainstream media themselves, that of course love a nice big chunky negative headline because it creates clicks, it sells papers, it's headline grabbing. But I think the reality, and as you've touched on really in terms of past recessions, is very different, because those recessions, particularly the one that I remember the most, unfortunately, is 89-90, where it took probably 4 or 5 years to come out of that because of the uncertainty, interest rates being 15%, of course, and as you said just now, they're 0.1% right now. This does seem and feel like a much shorter term dynamic, a freeze rather than a crash.
Yeah, absolutely. I think and I think some people as well, particularly ourselves, head office, we've kind of looked at that and thought, okay, what can we do to better prepare ourselves? What can we do to get ourselves in the best possible position to take advantage? Because, okay, this might be 6 months or it might be 3 months. We don't really know yet, but we've just got to head down and get ourselves as prepared as possible so that we can hit the ground running, basically.
So tell me what's going to change, do you think, at Sourced, insofar as anything that you started to do differently or that you've had to do differently that you think actually is a positive in terms of a working practice that you're probably going to carry on with now that you wouldn't have otherwise done if it wasn't for coronavirus and the lockdown? Any kind of positives in that respect?
I think the first thing that I'd say where it's probably helped us, which is maybe not the best way to phrase it, but we've been aware of, some of our systems or some areas of our platform can be a lot slicker. And we've taken advantage of, okay, it's not as busy on the platform. We can now rebuild these in the background. So, when this does kind of lighten up or lift up, then we can start taking advantage. But do you know what, Russell, in honesty, the biggest thing, and I hate admitting this because I feel like I was wrong, which I obviously always wrong, and I'm also worried that staff are going to see this. The biggest thing I'd say that I'd honestly look to change is the working from home policy. I've always had this mindset that for people to work the hardest, they've got to be in the office. And I don't know whether it's just me that's kind of had that because I can see them, because sometimes if I work from home, the wife will say, can you nip and do this? Or can you help and do this? Or, there's always little things every now and then, but you try and get as much done. And I've always had that in my head that people have said, we can do X, Y, Z, but I can do it from home, and I've always said, no, you work from the office, that's it. We get as much done. And it's not a trust thing, because I trust the guys. I've got a great relationship with the team. They all work very, very hard. And what we've achieved in the time we've been going is down to the team. But when we started, initially we started to work from home so that we can make it a bit safer, obviously, as we were kind of learning a bit more about the virus. and the quality of the work and the amount of work that's come out of the team, working from home, just straight away, I was like, wow, have I been making a huge mistake here? Have people like Facebook got it right and I've been doing it wrong? Because, you know, they're happier because they're at home, they're in a nice environment. Don't get me wrong, I think some of them still want to be able to have a chat and a bit of banter and a coffee and everything else, and everybody needs that. But I think it's something, certainly, I'll sit down with the team when we get back and say, okay, you know, it's an option. Do people want to do 1 day or 2 days a week from home and have that flexibility? Because, been really shocked by it, to be honest.
That's really positive. So maybe a blend in the future. So not everybody at work all the time, not everybody at home all the time, but maybe a mixture. And I think trust is definitely an important thing. I hear from a lot of people that they feel more productive at home, almost more motivated. I mean, it certainly cuts out the commute time. You know, I find I'm at my desk at 8 o'clock, whereas if I was to go to London, I'd be at my desk at 9 o'clock. So automatically I'm getting 2 hours a day extra. And I'm actually the worst, as I suspect you are, for, you know, certainly working from home. You don't switch off and finish at 5:30. You know, you go down for dinner and you're straight back up at your desk. And so I personally think that there's more sometimes gets done as a consequence. It's very interesting. You've kind of had that almost a eureka moment by the sounds of it.
Yeah, definitely. You know, it's not. I've thought about it in the past, and you know, you see larger companies do it, don't you? And I've always thought, no, it won't work. It will give people time to go and do personal things and stuff. Which, you know, we've always got the flexibility. We'll always work with people, but yeah, that's probably been the biggest lesson I've kind of learned, to say, well, actually, if it's going to make people happier, and like you say, the commute. The only thing I'm disappointed about is literally 2 months ago we moved into bigger offices and everything else because we needed them. So I could have kept the smaller offices. It's typical, isn't it? So lesson learned.
You'd have to move eventually, wouldn't you? I suppose. So good. Okay. So and some positives. I know. Look, you and I had a conversation earlier about, you know, people don't want to be seen to be gratuitous over coronavirus, but again, the theme of this podcast is positivity. So what are the positives that you've found over the last kind of 3 or 4 weeks, the kind of the upsides, almost the golden nuggets that you've taken from the situation over the last 3 or 4 weeks? And Steve, I honestly don't think any businessman, any business person, entrepreneur should be ashamed of having turned problems into opportunities. So wax away, mate. Tell us.
Yeah, you know, obviously we touched on this earlier, and for me, I was kind of a little bit nervous about talking about it because I don't know, I just kind of have this impression that, you know, if you do talk about positives that you've achieved, or, you know, is it the right thing to do in the market? Because not everybody's in a great place, but, you know, I take on board your comments completely. We sat down when this first started to hit us, and, you know, I remember the sort of 2008 market, and I remember it happening very quickly. I remember probably waiting with everything too long. You know, I continued to keep all my costs, keep all the staff, keep everything running the way it was, because I was new to it. I was that was the first recession I'd been through, and I was still kind of learning. And when this started to happen, I was a lot more reactive. I was a lot more agile. You know, straight away we had meetings to discuss what can we put on hold, or what can we, what don't we need to do right now, and where the savings can be made immediately, rather than waiting a month, 2 months, 3 months, and then, you know, having lost that money. One of the good things, I don't know if you want me to kind of touch on it now, about the meeting that I had in January. So I had this really nice lady come out to see me, Pam, from a research and development company, and they make claims back from any research and development you've done from the government. And when we first met, straight away I said, yeah, these are the projects we've done as a business, because we've built our own platforms and tech, etc. We talked about it in great detail during the meeting, and like any meeting, and like any, you hit the nail on the head earlier when you said, look, the markets January, February were fantastic. We were really, really busy, so this kind of got put on a back burner. And I remember in the meeting, she actually turned around to me to say, you know, the reason these claims don't get paid out is because the directors never fill the forms in. And it was exactly what we did. So it was a lesson learned. But as soon as this happened, you know, I looked at options to say, okay, where can we make savings as a business? Not only just to make sure that we've got that reserve there, but secondly as well, one of the big things that I learned from the last recession is companies came out of it and stockpiled cash, and then started to buy really good opportunities. And we want to be in that position so we can start buying and we're seeing some really good opportunities coming through now. But yeah, with the research and development side, it was one of the things that I filled in a couple of weeks ago, sent it over, had a chat with Pam, really, really helpful. And yeah, received confirmation that we'll receive a amount of money back, basically over £50,000, which, you know, as a business, absolutely fantastic. So, and it's just really, it's something we could have actioned in January, but I suggest anybody to look at all the different grants, all the different options that are available. And it's making us look at different areas of the business to make it a little bit leaner. I mentioned about the new office we've moved into. You know, we've got this great office. We've spent a lot of money kitting it out. We're paying a rate of £1,000 a month. And then when we actually look at it, we've got one area of our business on the bottom floor, one area of our business on the top floor, both paying, you know, towards the rate as different businesses. So when we've spoken to the local council, they've said, well, no, actually it should be split. Therefore, it's below the threshold, so we don't have to pay rates on it. So that's actually going to save us in the long term, because it's £1,000 a month for not just the next couple of months, but for forever forward while we're there. So really big saving.
Pretty cute, really, and pretty innovative in terms of finding sources of money that are kind of owed to you anyway, but you've now had the time and the presence of mind to kind of do something about them and to save money. A shameless plug, by the way, one of our propaganda clients is a research and development tax credit company called RIFT, R-I-F-T. So I'll just get that in if you don't mind, because
well, I'd recommend anybody listening or watching to contact them, Russell, because for the sake of a 5-minute call, I did not expect a claim of that sort of level, and you know, it was pretty.
And whatever business you are, however big you are, you know, 50k plus is it's definitely worth having. I mean, that for, you know, any business is a proportion of their overheads that extends their cash runway for sure.
It'll cover a month of your salary, won't it, Russell? So you know, that's the key. Nearly.
Ish, if only. If only. So there are a few positives out of this then, and look, coming out of this potentially, you know, a leaner, fitter organisation, maybe even better, could we say?
Yeah, I hope so. I hope that, you know, again, the team around us, we've got guys that are being very positive about it, coming up with ways that, you know, we can improve this, we can improve that, and working on that as and when they can. Not only that as well, you know, we've done Zoom interviews, so that's been something new for us. So we know we need new employees in the team. So rather than just kind of put everything on hold, we've been continuing the process, doing the interviews by Zoom, and we've got a couple of guys that will be starting with us after the lockdown. So hopefully, you know, a more agile team, a bigger team, and you know, lots more to go at.
Okay, let's talk about house prices. Obviously, you've got your finger on the pulse insofar as your various projects, which obviously are all over the country, yeah? So obviously they're, I know you're northern based. So what do you think is the outlook for house prices? So if I was to say to you house prices in 12 months higher or lower, what would you say?
Yeah, I'd expect to be higher. I don't think we're going to see records being broken in terms of growth, but you know, I'd expect them to grow definitely.
Well, good. All right. But again, back to the whole fundamentals, cheap money as in interest rates and mortgage rates. And actually think about the demand that started to kind of flow through the property market when the kind of shackles of Brexit paralysis were lifted, taken off kind of January onwards. That pent up demand, you know, still exists as far as people that didn't buy and didn't sell during 2018, 2019. So I think it gets back to normality and beyond. Certainly, as Mark von Grunher from Benham & Reeves was saying in another episode of this podcast, that, you know, China's already got back. China's already now doing more daily sales than it was at the end of last year. So I think that's a very interesting lesson, a very interesting proxy, I think. But okay.
I think it's very you know, when I was in the estate agency world, we used to have a term for the Christmas fever, and it's very much that, isn't it? You know, people are off work, they spend time at home at Christmas and realise that we need a bigger house, or, you know, let's borrow money because it's cheaper and let's expand there, and they'll start looking on Rightmove, and as I said earlier, I think Rightmove and Zoopla and all the portals will be getting record hits at the moment because people at home considering it, having a search around, seeing what's going on. And yeah, hopefully we'll see it. It was actually mentioned as well in the Savills report. I don't know if you've seen that at all. Savills housing report. They actually commented the same sort of thoughts in terms of people are sat in the house at the moment, and it will come out in terms of, yeah, we need to get a bigger house, or
Yeah.
another side of it is going to be extensions and things like that. I'm sure that's going to be an area that will grow as well.
Yeah, so yeah, people cooped up that want a bigger house. I hate to say it because it's a negative, but divorce. In China, apparently the divorce rate has kind of gone through the roof. Unfortunately, I would imagine if you've got a shaky relationship, not you, but generically, if
I feel like I'm at therapy now.
yeah, I know. So yeah, tell me about all your problems. No, if there's shaky relationships out there, then as a consequence, I'm afraid there will be divorce. You know, and from a property market perspective, I'm afraid, look, and I'll say this, not you, that negative could become a positive in terms of volume. You know, it's again, I'll keep saying this podcast is about positivity insofar as the property market. So,
what the wife said to you?
Yeah, no, she left days ago. So just kind of finally, just to wrap up, anything that has kind of surprised you from the point of view of working at home? I mean, obviously you've rediscovered that you've got a wife and kids and they're now seeing you.
Yeah, working from home, I think, you know, there's challenges in it itself, isn't there? Let's be honest. And I think, you know, I've been very lucky in terms of wife and kids. We've all kind of realised that it's an unusual situation and we've got to kind of work around each other a little bit more. And the schoolwork, as I mentioned to you earlier, the guys are absolutely bombed out with the amount of schoolwork they've got, which is great because it's keeping them busy. But yeah, I think it's nice. It's been nice spending more time with them, obviously. But you know, I've started to shake a little bit now to get back to work and things like that. So and normality. Jumping from room to room because you can hear, you know, their discussions and stuff like that, which is always fun. I'm sure you've had experienced it as well. You're on a really important call and it gets to a heated bit, and you can hear, you know, mum can have some toast or something like that. So
exactly,
being echoed down the stairs. So.
It's like that clip from that ambassador, that diplomat, isn't it, 2 or 3 years ago, where his kind of kids come, his wife comes running in. I'm sure we've all had that kind of experience over the last 3 or 4 weeks. So look, just finally then, in terms of your kind of your sentiment, your mindset, more positive than negative, or more negative than positive insofar as the next few weeks and months?
I think you've got to stay positive, haven't you? You know, there's no point in China in kind of beating yourself up because we don't know how long this is going to go on. We've just got to be positive with what we've got to work with, and look at it that, you know, we've kind of looked at this, that it's a chance to step back, assess our business, look at how we can make it more agile, look how we can set it up to do bigger and better things when we get back to it. So, you know, we're taking advantage of all those things. And yeah, I'd like to think that it's going to be, I'd like to think we can pick up from the market where we were in sort of January, February, and continue that kind of growth, because ourselves, like most property businesses in sort of Jan, Feb, we were thinking we're going to have a record year. We're going to, you know, we were well ahead of target already. And we were straight away thinking, you know, expansion and all these different things going on. And, you know, I don't want to be in a position at the end of the year where I'm sat back saying, well, the whole year was ruined, because what I'd rather be doing is sitting back and saying, okay, we didn't achieve those figures, but we put the business in a better place. We've got this. Now let's get our heads down for next year and let's really make it, you know, smash out of the park sort of thing.
Yeah. What a great attitude. Steve, thank you for being so positive, genuinely. Yeah, look, thank you for letting me grill you for the last 15 or 20 minutes. And look, good luck. And I look forward to seeing you face to face, hopefully in the next few weeks, mate.
Yeah, absolutely. Thanks for your time. I appreciate it. Take care, mate.
Cheers, mate.